Hello, and welcome to myfinanceteacher.org. I hope you all had a nice weekend, and let's have a quick update on a range of markets. And this time I want to start with gold. As you see from this chart, gold has been moving within narrow Bollinger Bands in the last few weeks. And as volatile periods replace calm periods, we've mentioned this a few times in some of my older videos, a break out of this narrow Bollinger Bands is likely very soon. We see on Friday gold actually bounced strongly after yet another retest of the 50-day moving average. At the moment, gold is above the recent highs of June, and those highs are at about 1746. But I still want to see what happens to gold price once the US markets open. So if gold price stays above those levels of 1746, let's say, and if that, let's say, happens a couple of hours into the opening in the US, then I will increase my allocation to precious metals related assets. And for more details on that, check us out at myfinanceteacher.org. Now, if the rallying stage of a new short-term daily cycle in gold has actually started on the 5th of June, meaning that if the previous cycle was relatively short and finished within 35 days, then it means that the ongoing cycle is only 14 days old. And the fact that it's still young, plus given that the 14-day RSI is at the moment only at about 59.5, meaning it's still pretty far from overbought levels, all of that means that there is a nice promise of a move up to, let's say, 1,800 over the next few weeks. Of course, on the other hand, gold is now almost poking through the upper range of the Bollinger Bands. And if the bands continue to contain gold, as they did over the last several weeks, then there is also a chance of a drop into a cycle low, giving us a cycle lasting for around a couple of months. And that is still pretty likely because 1.5 to 2 months is kind of a regular duration for a daily cycle low in gold. In either case, longer term, I am confident that gold will make new all-time highs. Gold is very likely to break above $2,000, possibly over the next couple of years. And as it looks so far, we are likely still on the track for that target of $2,021 by the year 2021. That's one of my videos I actually made all the way back in the middle of 2018. After all, gold has already done all-time highs versus a range of other main currencies of the world, except for the US dollar price, while US dollar itself over the last couple of years has failed to break above 103. And in the last couple of years, every time dollar reached 103, it dropped significantly a few months after that. As you see, dollar is now below 97 and it's been falling all the way since March. So with weaker dollar, with gold price at all-time highs against a range of other major currencies, I think it's only a matter of time before we see gold above $2,000 per ounce. Next, looking at GDX, over the last few weeks, that's since middle of March, GDX has actually been underperforming gold. So if gold is ready to move up to 1,800 over the next few weeks, GDX might actually catch up nicely and possibly reach that resistance zone that we've mentioned for a few weeks in some of the previous videos at about $39. That is a resistance zone all the way back from the low in May of 2012. Next, moving on to the stock markets, S&P 500 is on day 36 of its short-term daily cycle. Given that usual duration for these cycles is around 2 months, S&P is likely to test this 50-day moving average or the low range of the Bollinger Bands somewhere near 2,900, 3,000 in the next few weeks. At the time of the recent drop, 14-day RSI on S&P 500 has dropped only down to about 49, which means there is still a lot of space until oversold levels. which in turn means there is still potential for considerably lower S&P 500. And looking at the futures, futures are now lower than the closing price on Friday, also indicating possible continuation of the decline. Next, let's have a look at crude oil. This is the chart of futures rather than the spot price. In the last few weeks, crude oil futures price has increased substantially, but the 14-day RSI hasn't reached overbought yet, and crude oil hasn't really poked through the upper range of the Bollinger Bands. So over the next maybe 1 or 2 weeks, crude oil might still poke through the upper range of the Bollinger Bands. It might still move up a little bit. However, as the stock markets decline into the next few weeks, crude oil is also likely to drop after that poke through the upper range of the Bollinger Bands. In the intermediate term, crude oil might actually suffer quite considerably, maybe retest that 50-day moving average, say somewhere at about $30 or so. After all, the stockpile of crude oil and petroleum products in the US hasn't really decreased at all since March this year. And in the intermediate term, that's not tomorrow, but if these stockpiles continue to increase, that might put a lot of pressure on crude oil price. And looking at consumption of petroleum products in the US, even after a substantial increase since March, still consumption of petroleum products is still about 17% below consumption last year in June, meaning that the recovery is not complete yet and we might still see weaker crude oil prices. Hence, while crude oil might still rise a little bit, another significant drop is quite likely. And actually, I think that drop might be a nice buying opportunity in the energy market. So for regular updates on that and on a range of markets, including precious metals, stock market, Bitcoin, other cryptocurrencies, and energy, join us at myfinancesteacher.org. For now, I wish you a very nice day. In return for my best wishes, maybe you could hit that like button and even subscribe to the channel if you haven't. And lastly, good luck in your trades.